Hello everyone and welcome to an ICB webinar. You're very welcome today. Today we've got Chris Downing from Sage coming to talk to you. Good morning, Chris. Good afternoon,
Good
Chris.
morning. How are you?
I'm great, thank you. I'm in our very warm office in London today. Everybody who's joining us, please, can you say hello so we know you're there? Can you let us know where you are? Can you let us know anything interesting that's going on in your life? You know, I like to know all the gossip. So usual standard housekeeping from an ICB webinar. You can expect top-notch, interesting, informative and educational content. Chris is available for questions. He said he's going to take the questions as you go along. So it's probably best if you put them in the Q&A box because I know what you lot are like. You'll all be talking in the chat. So keep your questions in the Q&A. Chris is great because he'll be able to answer those as we go along. So you're going to have an update on MTD today, and also the subject is around supporting your clients who aren't that au fait with using the software that you're living your life by. And Chris is really up to date with everything that's happening at MTD, so it's going to be really useful. There will be a recording, but before I hand over to Chris, I did want to have a serious conversation with every single person on this webinar to tell you that you have a week left to get your ICB Bookkeepers Summit tickets at the early bird rate of £124. The summit's taking place on the 17th of November in London. We have a great day. We have some fantastic speakers, just like Chris Downing. It's a whole day. We've got 2 tracks this year, so you can choose the content that's best for you. We have loads of different talks that are available for people at different stages of their career. All your drinks and refreshments are invited, and all your ICB pals are going to be there. So don't miss out and don't miss that early bird price. Great. Okay, so I'm going to love you and leave you, everybody. Chris, I'm going to hand over to you and enjoy your session.
Thank you very much. So, yes, I will do Q&A, and I can already see the chat is very busy. So if you've got any questions on MTD or anything I'm talking about, please drop into the Q&A. I can see the panel, and I'll do my best to weave it in. So for those of you who don't know me, my name's Chris Downing, Director of Accounts and Bookkeepers here at Sage. I was an accountant by trade for nearly 20 years. So I've been in the profession for sort of 25 years now. So when we think about making tax digital, it's a subject which just keeps on giving, isn't it? We're always learning something new, also a bit of a surprise. And really the purpose of this session is to give you an update in terms of what you need to know about MTD. So there'll be some things saying, oh, I already know about that. But hopefully there'll be lots of things where you think, oh, that's new to me. I didn't quite get that. Could you please say it again? Or actually watch this on demand and get the details. But also more importantly, it's what you should be doing. Now, clearly, the purpose of this audience here, you'll have clients already using software because if they're doing VAT, they're all using various ledger tools, etc. But when we think about making tax digital itself, the biggest challenge is a lot of small traders do not appreciate the value, do they? And also it's a case of thinking, what do they need to use? And also some people are just set in their ways. So it's a case of, though there are a whole load of ledger solutions, the purpose of today is actually think about those clients who are literally not going to engage with software, hand over their bag of records, not once a year, but once a quarter, monthly or more regularly. But really the key thing is let's get into the detail. So as we all appreciate, MTD is happening. MTD is happening next year, and therefore from April 2026, sole traders and landlords will need to maintain their records digitally, submit a quarterly update, which is a handshake to HMRC, it's not a set account, not a tax return, plus also submit their tax return via software. The portal, which HMRC allows those who are unrepresented, not engaged with an accountant or bookkeeper, do the self-assessment tax returns, will disappear. So therefore, if they want to file a tax return, they have to do it via software, not through the HMRC portal. Then a year later, the threshold drops down to £30,000, and then from April 2028, the threshold drops down to £20,000. So as you can see, the writing's on the wall. MTD is the approach to take for sole traders and landlords. There's no news about what's going to happen to 20, but I can imagine that's the approach life will take there forward. But also, this is how tax returns will be managed in the new world, because HMRC are basically consolidating all their databases. When you phone up HMRC and you eventually get through the helpline, you have a query about PAY and CIS and maybe another thing. They're different databases when actually it should all be in one place. So when you think about the future of taxation, though partnerships are not on the visibility of MTD, and I'll be honest, I don't think they'll come into MTD because there's only 360,000 partnerships in the UK compared to the 3.6, 3.7 million sole traders. The key thing is digitalization, and the ability to file a tax return in one place is really the way forward. So when we think about the priorities, we're thinking about actually, when you think about April 2026, it's about those sole traders who were preparing a full set account, so it's P&L and balance sheet. We're trying to sort out the fixed asset register, making sure the sales ledgers all reconcile, making sure we're calculating and bringing in, let's say, the interest on loans. Those more simple sole traders, so it's literally income and expenditure. They may just be doing cash accounting, so really more simpler approach in terms of bookkeeping needs, and also those troublesome landlords. Yeah, clearly, a landlord by themselves owning a property portfolio all in their name, that's straightforward in any legislation. But when you've got, let's say, mixed or joint ownership, that's where it gets complicated. And this is where, to be honest, we recommend use Hammock. Hammock just deals with it really, really well. But then again, it's thinking about the right solution for the right job and right client type. But when you think about our priorities, the clock is ticking. And for those of you who know me, there's only 181 working days until April 2026. So therefore, it's all about the priorities. Yes, we've got, let's say, dealing with clients right now, thinking about the VAT return that needs to be submitted in 3 weeks' time. We're thinking about, let's say, those clients asking, can I reduce my payments on account? Well, all of this would be easier if we had access to their client or accounting records in a digital format. And really, that's the whole thing. It's that case of the benefits of MTD is digitalization, having access to information, but also more importantly, getting the tax right. When you consider over 4 million tax returns are filed every January, that's 4 million people who are finding out about their tax liability 9 months after their year end. That's 4 million people scrabbling around for, let's say, what do they spend 17, 18 months prior to that. And this is the whole point, is capturing information in a timely manner is actually going to improve the accuracy of the tax returns. But more importantly, some clients may actually end up saving tax, because just imagine, it's all very well having a bank feed and bringing that in, but clearly some items are paid by the spouse, maybe paid through an Amazon account, maybe paid through a credit card. And therefore, capturing that information on a timely basis is more likely it's going to be kept into play and brought into the tax return itself. So is HMRC portal being removed for those who aren't caught by MTD? No, the HMRC portal will still be there. So for those who are not a sole trader, not a landlord, will still be able to file their personal tax returns via the HMRC portal. Those sole traders and landlords will be filing their MTD tax return through software, but they'll still have to access the portal in case they have to do a repair and the self-assessment. They're going back in time. But clearly, you could probably imagine HMRC at some point in time in the future will basically say, right, we're not going to support doing tax returns through the portal. There is no confirmation of that, but as you can probably imagine, that is probably the way forward, because actually the MTD world, the agent service account world, that is really where taxation is going to be dealt with. So when we think about what we need to be thinking about, HMRC have already been dropping that awareness of MTD. So you as agents would have got letters back in February and March, and HMRC have done a huge letter drop to all those sole traders and landlords with gross income of more than £45,000. They're basically hedging their bets. So that letter drops have happened. Really, naturally, there'll be some clients who will not fall into MTD because they'll stay below £50,000, or the turnover was inflated in 23-24 because of basic period reform. But the key thing is there'll be continuous awareness. But really, that's the letter drop then. The next letter drop will effectively be in February, March next year, because those clients who file their 24-25 tax return and file it by the 31st of January 2026, that will confirm whether they're in or out of the first phase of MTD. And depending on whether they're in or out is basically dependent upon what is appearing on their tax return. Now, we talk about turnover, gross income. Really, what's happening is it's the turnover, it's gross sales, it's total rental income, it's other income. So if you imagine those boxes which appear on the tax return, the SA 103, the 105, and the 106 for foreign income, those are the box values in your mind when you look at your client's tax returns in terms of whether they'll be hitting those thresholds of 50, 30, and 20 over the next couple of years. But also, we need to recognise there are some people who will be out. Clearly, partnerships, they're not in scope of MTD. If you've got trustees or a trust or a pension scheme, obviously they're not in. But also little things like if the taxpayer has a power of attorney in place, they are not coming into play, possibly because someone else has responsibility of their tax return. And I think this is why it's really important to understand the legislation of MTD. It's not just about gross income, it's also understanding who may not actually come into play, which also affects in terms of why some people example, when you try and sign them up, the agent service account may not actually qualify because, for example, if they're claiming married couples allowance or maybe blind person allowance, they can't join MTD, frankly, because there's only a couple of thousand are making those claims, and HMRC do not intend in the first round to actually make available those APIs. Yes, Michelle, I'll send out a PDF version of these slides, but if you could keep all questions in the Q&A, I'll more likely to see it than the chat. So when we think about planning for MTD, we also need to be thinking about what are these updates, because the whole thing of MTD, we recognize the tax return, we try and maintain our clients to be digital. That could be an Excel spreadsheet at the moment, but these quarterly updates, they're the one creating all the conversation, isn't it? So for starters, HMRC will assume that all your clients have a 5th of April year end. If they don't have a 5th of April year end, so this is going from a standard to a calendar reporting, you need to inform HMRC in the first quarter of MTD, and that informative approach happens within software and not through the agent service account. But also these updates, these are cumulative because HMRC recognise that mistakes happen. Errors are made, or maybe even a change in judgment. So, for example, an item which was posted to repairs in Q1 may actually be deemed to be a capital expense, a fixed asset in Q3. So, therefore, the whole point of these quarterly updates isn't there a set of accounts or a tax return. They do not have to be fundamentally accurate like a set of accounts. These are like a digital handshake. It's a validation that your clients are maintaining digital records. HMRC expects what is reported in Q4 to look almost totally different to the tax return, because they appreciate things like fixed asset adjustments, inventory adjustment, depreciation, accruals, prepayments. That all that magic happens at the end of the year. So therefore, the quarterly updates is really just a validation of clients maintaining digital records. But it doesn't mean that ones and zeros should be just posted just to keep up to scratch, or basically in terms of maintaining digital records. It's all about having the right approach and the right scope of work and understanding what is the basic needs of digital record keeping. It could be simple as, let's say, a bank feed with categorization, and then at the end of the year, you basically journal in the movement on the sales ledger and the purchase ledger. The key thing is actually just to have your clients maintaining digital records. In terms of deadlines, and the deadlines are basically the 7th of those quarters, unfortunately fall in with the very busiest of quarters in terms of VAT returns, but don't see the deadlines as a target of filing, because these digital updates are literally an update, a digital handshake. Once that first quarter's happened, there's nothing stopping you from actually filing that update, because there is no requirement to get your clients to actually sign off and declare or actually have that authorization to file. Because if you imagine, for the last 25, 30 years, we've been programmed every time we get to send a VAT return on behalf of our clients, every time we send a set of accounts or a tax return, the client needs to approve that. There is no approval required for these quarterly updates. And this also has been confirmed in the PCRT guidance, but provides some of the other institutes. But really what it should mean is the fact that in your letters of engagement, you should have the right scope of work, but also confirm with your clients that you'll have authority to file these updates when a certain quality of record keeping or the certain number of records that come into play. Any idea when marriage allowance or married couple allowance will be allowed in joint beta? Unlikely at all. In fact, it's not going to, effectively, there are even no plans for those people to be brought in maybe from 2026. So literally no idea. It is literally a handful, only a couple of thousand people in the 3.6 million. So this is why they're out of scope at the moment. As you see on the screen, you've got standard reporting, calendar reporting. Calendar reporting needs to be informed to HMRC in that first month, but also in that first month, you're going to inform your HMRC whether your clients are maintaining cash accounting or accruals accounting. Once you've chosen, you're in it. So again, you need to make sure you're actually informing HMRC correctly. And then in terms of the tax return is still due by the 31st of January of the following year. And there are no plans to bring in more regular payments on account. Payments on account every 6 months, that's the way to play it. There are no plans of doing so. And if HMRC wanted people to pay their income tax more regularly, they could have done so without MTD legislation. It's just an approach to it. When a submission is made, a quarterly update is made, there'll be an estimated tax liability calculated, and that calculation is performed by HMRC. And the other little drop here as well, the software providers are not doing the tax calculation. HMRC are doing the tax calculation when we come to the tax return itself. So again, it's a change of mindset and approach, and also the understanding in terms of who is doing what. So let's also talk about penalty points. So MTD for income tax brings in the penalty point regime. We're used to this now with VAT. That came in not too long ago. And really, whenever there is a submission made late, that's when a penalty point is accrued. And also, it is when a certain level of penalty points are accrued, that's when a financial penalty comes into place. So, for example, when 4 penalty points are arisen, that's when a £200 fine will be actually provided or basically charged from it. So a quarterly update late, that's 1 penalty point. A tax return late, that's a penalty point. So here's another thing is, with MTD, the tax returns no longer have a £100 late filing penalty. You get a penalty point instead. So this is why it's really important to understand the details. Now, if you've got clients who are sole traders who are VAT registered as well as coming into MTD, and let's just assume they file the VAT return late and the quarterly update late, yes, that may be a point each, that's 2 points, but they're not added together to reach those thresholds. They are independent in terms of those threshold bases. And also the points are reset to nil when there's been a 12-month period of good compliance. So for example, if 2 quarterly updates are filed late and that gives 2 points, after 12 months of filing quarterly updates on time, that is when the points will be reset to 0. And people think about, well, should there be like a soft landing period in terms of penalty points? I cannot imagine this happening, and actually I don't think it's a good idea to have a soft landing either. We have a soft landing in the testing phase this year right now, so if a quarterly update is filed late, because really it's testing the system, that's absolutely fine. So for example, you could join the testing phase in September, October, file Q1, and there'll be no penalty points, which is the good thing to play. But from April 2026, just imagine 35% of sole traders and landlords do not work with an accountant or bookkeeper. That sounds crazy, doesn't it? So somehow they're preparing their own accounts and filing their own tax returns. So just imagine if you had no nudges and prompts and no, let's say, stick to meet the requirements of MTD, you could have people in that 35% come all the way to January 2028, which will be the first filing tax deadline of the tax return, and not done anything at all, because there's been no penalty points in place. So it's not the right thing to have. So really, as far as I'm concerned, there will be no soft landing period for penalty points. We talked about penalty points. Let's actually talk about late payments. So we all appreciate that actually income tax, the liability, the final liability, the balancing payment needs to be paid by the 31st of January each year. We all know this. However, under self-assessment, after 30 days, there will be a 5% penalty point or penalty charge for late payment of taxes. And then after 6 months, that goes up by another 5%. So we know that. So it's basically a step. But there's no, let's say, encouragement to actually pay the taxes. Because if you imagine over that period, they basically just got paused or still not paid their income tax. Yes, there may be some interest, but there's no actual late payment penalty. Now, under MTD for income tax, that all changes. So those sole traders and landlords who come into MTD, after 15 days, if they've not paid their taxes, that is when there'll be a 3% late payment penalty. After another 15 days, or after day 30, if they've still not paid it, that'll be another 3%. So you imagine, for the example on the screen, if someone owed £2,000, it'll just be over £100 in terms of actually what they need to pay after day 30. But also after day 30, if they still continue not to pay their taxes, there will be a 10% per annum late payment penalty on the amount outstanding. Now, also, the other key thing is, if they are unable to pay their taxes, just having a time to pay payment in place will actually remove that late payment penalty. Now, some people say, well, this is a bit harsh. Well, is it really? If you think about it, the whole approach with MTD is to have visibility for estimated tax liability. So just imagine already through the current year, the taxpayer will have visibility of what they should be paying. It will not be a surprise like there is a surprise to 4 million people who file their tax returns in January. So they have visibility of how much they're due. And if they feel they're in a position that they'll be unable to pay their taxes, if they get a time to pay in place, which they can do so once that tax return has been submitted, that late payment penalty regime will disappear. So therefore, it's having visibility of what the changes are going forward. But as also I said, there'll be no £100 late payment penalty like we are used to under MTD. That just disappears itself. So for those who, just a reminder, so for example, for every trade, there is a submission required, a quarterly update required. So if you've got Pete the plumber, Pete the plumbing is repairing leaks Monday to Friday, have to maintain digital ledgers, will have to file a quarterly update. If Peter's an Uber driver at the nights and the weekends, that's another trade, that's a different business. He'll have to maintain digital records and also submit a quarterly update. All property income in the UK will need to be consolidated together. So if you've got joint ownership, that will just be brought together in a single update. And any foreign property income will also have to be consolidated and also sent as well. Finding hard to speak me, can you hear me okay? If there are any issues, I'm sure someone will jump on and let me know, but there's a lot of content, so therefore you can watch on demand afterwards. So those quarterly updates are performed, and this is when you bring all the records together, and that's when actually you'll start doing the tax return process as we know. In terms of terminology, final declaration is out. So if anyone's talking about final declarations, they're wrong. Tax return is the terminology to use, because frankly, that's what people understand. So if you imagine the terminology is quarterly updates, as well as a tax return at the end of the year. And that end of the year submission is required by the 31st January. So in terms of, let's say, client engagement, so the steps you need to take, well, really be proactive. HMRC have dropped the letters, they'll continue to do other social media posts, they'll create awareness in the market. The technology providers will be talking about MTD as well as your peers in the profession will talk about MTD. But also be ready for those conversations, be ready in terms of the who, what, why, where and how of MTD. There's a lot to talk about, but also talking about the concerns the clients may have. Be ready with those conversations, listen and understand what the queries are, the concerns are, but also talk about the benefits. It's a case of the benefits are not just having visibility of their tax estimates, but if they're using the right piece of software. So for example, on Sage, Pete the plumber can raise his invoice on his mobile phone, tap the mobile phone to, let's say, the other mobile phone and get paid instantly. The whole point and the benefits of digital record keeping isn't just the visibility and understanding tax liabilities. It's about getting paid faster, understanding your business performance, understand your liabilities, understand who owes you what money. This is all about the benefits of digital record keeping, but also be ready to have those conversations about prices. Think about how your clients may be feeling about maybe paying a little bit more, or actually just paying the right fee based upon the great service you deliver. It's all about being ready with those conversations. But the key thing is weaving MTD into every communication point, because obviously Dave down the pub will actually be having his own stories of what MTD is all about. It's all about being confident in terms of what it's all about, especially these quarterly updates. It's not 5 tax returns, as you see sometimes on TikTok. It's 4 quarterly updates and 1 tax return. So having real clear guidance is really important. But also with this, be really engaging in terms of, let's say, or actually more importantly, be inquisitive. MTD is a great opportunity to review and revisit what the technology providers are doing. It's just not about digital record keeping, it's all about the richness of the capabilities. Think about receipt capture built within the tool itself. It's not just, let's say, a separate tool like auto entry and Dex to bring data in, it's having to make sure the right tool's in place. But also it's the opportunity to review the full technology stack, but also the capabilities of the future. We cannot miss the capabilities and the opportunities of generative AI. So therefore, think about and quiz the technology providers in terms of how they're bringing that to life. But also, it's a case of just don't think about MTD as something you do alone. Reach out and get the support you need. It's not just about the training, it's also about the marketing material. It's all about the support you need to get ready for MTD. So let's start thinking about the steps you need to play in terms of making tax digital. So the key thing is, I think the most important step is all about client segmentation. It's really getting to understand your client base. It's not just understanding the sole traders and the landlords, it's also thinking about the limited companies, because to deliver a successful MTD plan is all about having the right level of capacity. It's just about thinking time, but also the time to do a little bit more. And therefore, the appreciation of actually reviewing a whole client base is actually just seeing how are you doing the books? What type of technology are you using? Are you using receipt capture where you can? Have you got clients using bank fees? Because every client can be made more efficient. But when you think about those sole traders and landlords, understanding their goals, their aspirations, are they thinking of retiring maybe in a couple of years' time? Because if you've got a client who is planning to retire generally in the next 2 or 3 years, why invest all that effort training them on a bookkeeping tool when actually they just need something which complies with making tax digital for 12 or 18 months? But then again, you may have clients who are turning over £50,000 and plan to be millionaires in a couple of years' time, and therefore put them onto a ledger solution which will grow with them as well. But also in terms of, let's say, the segmentations, understanding when your clients are becoming interface, what's their turnover now and what years are coming to play. Also, you may have some clients who will be suitable for the testing, the beta period, because they may be a sole trader, maybe VAT registered, already using digital records. But also you may have some clients who will be an easy lift to bring into a solution now and do those quarterly updates to just look at the experience. But also you need to capture what is their year end. Is it 31st March or 5th of April or a non-fiscal? Because that needs to be captured and put within the software in that first period return. I'll do a quick look at the chat. So please use the Q&A if you ask questions. Is it going to be an obligation to reconcile and verify every transaction within the quarter by the bank account? Well, really, that comes down to the scope of your work. So the whole point, it comes down to quality. So therefore, you have a duty of care in terms of quality. Therefore, it comes down to what is your scope of work with the client. You may perform a full bank rec at the end of the year, but actually you may just have a bank feed going in terms of the categorizations on the updates. So what happens to the figures in the tax return are widely different from the sum submitted in the quarterly updates, i.e. a late purchase invoice received by the client which wasn't included in the relevant quarter. It does not matter. This is the whole point. HMRC recognises that the year-end accounts will look nothing like the quarterly updates. So do not worry about that. The whole point of the quarterly updates is to have, let's say, that digital handshake, that validation, that tick box, your clients maintaining digital records. And this is the whole point of the quarterly with cumulative, is that invoices do come in late. That's just life. So do not get too concerned about thinking everything needs to be in. As long as you've performed your duty of care, to done the best you can, and the scope of work is with your clients in terms of, I need information by a certain date, and this is what I'm going to rely upon. If anything else comes in late, will just be picked up the next quarter, which means you're not focusing on that target of a deadline. You're basically trying to work with, let's say, your clients in a manner which means you can just deliver the work in a more timely basis. When will I show it when Sage works? Later on. Just be patient, okay? This is education, so bear with me. Now we're thinking about the other stages. So obviously, who's going to do what work? Are you working with an accountant? Are you doing the quarterly updates and the handing over the records to the accountant at the year end? Or actually, are you taking that additional qualification you do with ICB to do a set of year-end accounts and a self-assessment tax return? The key thing is understanding who does what, but also think about those trade types. Does your client have multiple trades? Is your client got rental income? Is your client doing cash or accruals basis? All of this needs to be captured in your segmentation tool. It's all about having the right information at source. And when we think about information, what is the client records? Do they have a separate bank account? And that's one of the key things. If your clients do not have a separate bank account, please encourage them to do so, because no one wants to be coding up, let's say, Netflix subscriptions and their grocery shopping. Separation of trade makes life so much easier. But also think about the quality of the records generally. If the client's got lots of paper records, they don't really capture things in a nice structured format, how do you change those habits and behaviors? But also think about the frequency of data capture. Is it something which should be done daily, weekly, monthly? How regularly should be the bank reconciled? The more effort, the more your clients should be charged. But also, it's all the key thing is creating the habits and behaviors of clients to share information on a more regular basis. And the next thing is obviously to be thinking about fee structure. So fortunately, as bookkeepers, you're working with your clients on a regular basis already. So hopefully your clients are paying you quarterly, if not monthly. But when you think about self-assessment, most sole traders, it's an event which happens once a year. So it's a case of the work is done, a bill is raised, and you get paid. With MTD, it's going to be a continuous service. We've covered the pricing of MTD in other webinars, and therefore please reach out to those to understand details on how to actually price for Making Tax Digital. But the key thing is to get clients to be paying you on a monthly basis. But again, think about what your clients are paying you for you today. What's broken down? What is the service? Because MTD is a massive opportunity to revisit what that fee structure is going to be. But also think about the nature of your clients. What is the propensity of your clients to engage with software? Because again, if they're not going to engage with software, you need the right tools, which enables you to get the quarterly updates done as seamless as possible. Now, in terms of the next steps, it's all about setting your clients up. So it's not just about software. You're going to have to do a job on the agent service account. Yes, your clients already exist in your agent service account. So that digital link exists between your agent service account and your HMRC online service account. So your sole traders and landlords exist in your agent service account, but you now need to do something physically with each one. Will HMRC accept the VAT credentials? No, you're going to have to do this new step, and this is what the steps are. So you go into the agent service account, you pick your client, which are the personal details, and you're going to validate what the details are. You can change the name, the address, and details if need be, but they should be already be accurate. You're going to just double check whether your clients can actually sign up for MTD. They may not be able to sign up if they still owe money, if they have arrears in debt, or actually they may have married personal allowance. So therefore, it's worthwhile just checking whether they can actually do so. And then when you're actually signing up with your clients, you're actually then thinking about actually what type of software they can choose. So whether you're using Sage, well, hopefully you are using Sage, or another solution, you're going through the list. I think there are about 23, 24 providers now on the list of compatible software. And then you'd be thinking about what tax year are you going to bring your clients into? So this is a really important question to get right. So when we talk about current tax year, we're talking about, if you're doing it now, it's about 2 clients joining the beta. If you're talking about next year, we're talking about clients joining MTD from April 2026. So be really clear in terms of what you're doing. And then once you're signing your clients up, you're basically agreeing your clients are going to maintain digital records, they're going to file quarterly updates, hopefully on time. They're going to use software in terms of that approach. And also they're going to use software to actually file that tax return as well. And then it's thinking about actually, bear with me to the next slide, is actually confirm the income sources as well. So where your clients have multiple SA 103s on their tax return, this is the multiple trades which you need to be setting up. But also with this, you need to actually put in, let's say, the name of the business. So it's all very well having the trade type. You also need to type in the name of the business. So obviously, this is where it's physically going to take some time. This isn't coming in automatically from the historical tax returns. So you can confirm those details, you can amend the details of the trade, and then also you're going to be not just checking the answers, but also bringing in, let's say, the other trade types. Now, if your clients set up their business in the past 2 years, so if they set up the business over 2 years ago, you don't have to worry about it. But if there's a brand new business, you're going to have to type in when that business was created. So again, capturing your segmentation tool. So once that's been confirmed, then you can start talking about property. So if your client has any property income, you just need to confirm with HMRC. So the reason you're doing this is when you go into the software and validate your software with HMRC, you'll be in a position to actually choose which trade and also what property you're linking the software to HMRC. So this is the job you need to do first on the HMRC side of your client's account. So again, with property, you're confirming whether it's cash or an invoice basis or traditional accounting, and that's the job done. Now, unfortunately, this job, even though I flipped those slides to give you an indication of what's involved on the HMRC side, will take about 4 to 5 minutes to complete. Now, in terms of approach, this is performed by the agent responsible for the tax return. So as a bookkeeper, if your responsibility is just for the quarterly updates or just the VAT returns now, you don't have to worry about this. The accountant will do this. If you're responsible for the self-assessment today, you will then have to do this exercise. Now, in terms of when to do it, I would do it sooner rather than later. Just don't leave it till February, March next year. But also do it once you're actually doing the 24-25 personal tax return, because you have all the information in front of you. So as you do the tax return, do this exercise. So basically validating the information required. Now, the next stage is obviously you've now set up the agent service account. The HMRC knows who's in and who's not. The next thing is actually setting up your software. So from Sage's point of view, we will enable you to actually manage all your clients in one place. So if your clients are filing via Xero and Free Agent and QuickBooks for their quarterly updates, you'll have visibility of all their quarterly updates in one place. This is what we did with MTD with VAT. So this type of experience already exists, but you still need to do that digital handshake from the platform, from the software to HMRC, so you can bring in all those clients, because HMRC is not going to build a client list in the agent service account. They haven't done it really for VAT. They're not going to do it for income tax either. So therefore, you need a place where you can actually surface all the information, understand what quarterly updates are due, what the tax liabilities are. This will all be available complimentary via the Sage platform. So you've done that digital handshake. Then the next stage is actually setting up the software itself. Now, every piece of software should more or less be the same. So I'm going to quickly show you what it looks like in Sage. So for example, if you've got a sole trader using Sage Accounting, you have the capability to tick the box for income tax. This will enable you to actually bring in other category items. So therefore, against the normal codes, our machine learning will identify which category codes are required, and you can change them as well. I know some providers aren't allowing you to do so. Well, we're going to allow you to change them because every client's like different. So having those nuances, but the key thing is just priming it up for that next step. But then also, if you've not chosen which digital record keeping you're using yet, I think the key thing is understanding what the approach should be. And my guidance is really understand who's going to do what work. The key question you need to start asking MTD is actually who is going to be doing the data processing. If your client has the propensity to learn, they're going to engage with tools where they can do receipt capture or raise some invoices on software. That is when you're going to start using, let's say, those cloud-based ledger solutions, so whether it's Start, Stand, or Plus. If your clients are smaller, their needs are more simpler, this is where Sage Individual is key. So we've built Sage Individual specifically for the sole trader market. So as a bookkeeper, you can get this for £4 a month. So it's mobile as well as browser. All our solutions have receipt capture built in, so they can scan a purchase invoice, it'll read the details and pop it into the ledger. It's got multiple bank feeds and also invoicing and tap to pay. So £4 a month, you can't really go wrong with that. But actually, we could do better. So Sage Individual also comes as a free tier. Because we recognize there'll be some clients where they literally have maybe 1 or 2 transactions a month. Yes, they may have bank feeds, but they don't really do invoicing. So occasionally that capability exists as well. But then we also recognize actually some clients are not going to play ball. They're nervous about technology. They may not allow open banking. Their approach to work is actually they put everything into a shoebox or a carry bag. They hand that over once a year, and actually that's the approach they want to take once a quarter. And therefore, you don't want to be sat there rekeying information. Also, your clients may have some spreadsheet information which you just want to bring in from a cash book or something. So it's a case of how do we deal with that job? And this is where I'm going to quickly step into auto entry accounts prep, which actually is a tool which a lot of accountants and bookkeepers are currently using for their year-end jobs. So for example, limited companies where they're literally just doing a set of accounts once a year, they're not VAT registered, sole traders are the same. It's basically how to get the job done as quickly as possible. Before I do that, I'm just going to have a quick look at the Q&A as well as the chat. Can I already sign up as an MTD agent and sign clients up even if they're not yet participating in the trial period, just to ensure that everything is ready? Yes. So even if your clients will not be coming to MTD until 2026, 27, or 28, it is not stopping you from going to your agent service account and priming your client up. Just validate the information. We all like to get the little admin jobs out of the way, so I would get that out of the way. It's done and it's dusted. You do not need to wait until the mandation year. Will HMRC accept VAT details for MTD? No. VAT is different to income tax. This is why you need to do that for every client. So, question from Emma. So you can no longer run a sole trader business and property through one Sage account, i.e. SE self-employed joiner with a rented property currently uses different normal codes to separate out income and expenditure of one Sage business cloud accounting license, but won't that be possible now? Right. This comes down to the reality of life, okay? So when you think about multiple trades or splitting out trades as well as rental income, depending on who you are, you're either going to use extended normal ledger, you're going to use departments, or you're going to use category codes. So if you imagine, there are probably 3 different ways you could split out multiple trades. It also demonstrates the fact that because your client is doing that, why is it? Because they're literally sitting with one bank account. At one bank account, they've got their trade, they've got their rental income, they've also got the whole personal life in there, which basically means it creates complication, doesn't it? And therefore, it's a case of how do you make that approach really simple? So therefore, we'll enable you to code up those transactions and submit a quarterly update through for the sole trader. At the moment, I've not seen any of the competitors actually show how that's going to happen. They talk about that they're able to do so, but we've not seen that. Now, from a practical perspective, there's nothing stopping you from doing a separate trial balance for each one, i.e. the normal codes, and then maybe using a bridging solution or an import file to actually do the quarterly update for it. But it really comes down to best practice, and best practice, I would personally think is a separate ledger and a separate reporting, because then it makes it really crystal clear and so much easier for the reporting. Right, I'm going to go through the chat as well, see if I missed anything there. Late invoices, submissions. So is the requirement to join MTD in 25-26 based upon the 24-25 turnover? Yes, it is. So you imagine the year just gone, 31st March 2025, what is reported on that tax return by the 31st of January 2026 will actually mandate whether coming in from April 2026. Okay, cool, we're there. Excellent. So let's have a quick chat about auto-entry accounts prep. So I'm not going to go big detail on the Sage accounting bookkeeping tools. That's another webinar for another day. The purpose of this webinar is to talk about clients who are not going to play ball. So you just imagine it's those clients with shoebox receipts, they're really messy records. You really want to get a set of accounts done quickly. So therefore, on the screen, you can probably imagine your client has either shared with you your bank statements, or they share with you an export, a CSV file from the banking account. And therefore, how do you do these accounts really, really quickly? And this is where auto-entry accounts prep is a key tool for this, let's say, job, because literally just drop the data in. So you're either going to scan your bank statements like you know and love already, or you're going to drop in your CSV file from your bank statements. And therefore, you'll be able to do this for every bank account. You'll be able to quickly categorize the transactions. You'll be able to split the transactions out. You'll be able to do the journals. You'll be able to actually quickly map a whole load of transactions really, really quickly and file those in. You can actually tag transactions to be, let's say, for a note or a query and report upon them. And then you'll be able to do the quarterly updates as well. The key thing is, we don't need to use spreadsheets for doing trial balances and ETBs and cash books anymore. Because you imagine the trouble with Excel is, yeah, though Excel is quick, it's not as quick as accounts prep. Also, Excel is prone to errors, as well as Excel doesn't really enable you to do a full set of accounts, because just think about doing journals and everything. And this is where auto-entry accounts prep is being used so much at the moment, because it's not just for, let's say, your sole traders, as maybe it's also for you're in limited companies. But as you can see on screen, the capabilities to highlight lots of transactions really quickly, map them to a category code and nominal ledger. There is nothing faster in the market than this. So really, when you think about MTD, you think about that client segmentation and think about which clients are doing what. Those clients who are going to use bookkeeping tools, brilliant, use them. But for those clients where actually it is bank statement job, it is a Excel spreadsheet, drop the data in, there is nothing faster in the market than auto-entry accounts prep. This will do the job for you. And then what you'll end up doing, you'll do the quarterly updates in the solution, and then you can literally just take that and just use it for the tax return at the end of the year as well. So while I'm just going through, just going to check the questions. Can I run my property income and mortgage payment and any other Sage expenses through the same Sage account for ease if the correct nominal code is set? The key thing is how, because the whole point is you need to have different mapping categories. It's just going to create complications for that at the moment. So this is why I was saying, if you basically got those split nominals, I would just literally do an export to a trial balance and use the bridging solution for that one. So that's accounts prep. Now let's thinking about the next stages of actually doing the end-to-end. So if you imagine we've been doing, let's say, the bookkeeping, but now let's think about that quarterly update. And really the quarterly update is that whole visibility of information. So from Sage's point of view, be able to see the quarterly updates due, you'll able to see the number of days available, you have to see the estimated tax liability. But the key thing is when you're surfacing that information, you'll just be able to send it to HMRC. And as you can see from that, there was no step required in terms of getting client authority. And this is the whole point. There's no authority required from the client to approve it. What I would do personally, though, is just make sure you're covered in the letter of engagement in terms of the scope of work. But also with these quarterly updates, you can send a quarterly update as many times as you like, because the whole point is as that information is submitted, other invoices may come into play, which then will improve the accuracy of that tax estimate. Now, in terms of that tax estimate, as we appreciate, it is just going to be an estimate because businesses are seasonal. They may claim capital allowances at the end of the year, but also there may be other sources of income which may not be recognised. But I think one of the other key things to actually appreciate is with MTD, if your client has PAYE income, so they've got an employment job on the side, that is going to be fed live into the tax estimate through RTI, unlike the end of year process. The other key thing is Think about all your grounds worker clients, your CIS clients, those clients who come in, let's say, on the 6th of April every year and say, can I have my tax refund so I can go on holiday? The magic of MTD is the CIS, which is deducted at source by the contractors, will be visible via HMRC. HMRC will show that information available. So just imagine you'll have some grounds workers who are absolutely rubbish at maintaining invoicing and what's being deducted at source. You'll be able to see those listings line by line. And this is maybe some of the benefits of MTD is greater visibility of the information available. So we've performed the quarterly update, and as you can see, view the report, download the report, PDF, Excel spreadsheet. So if, for example, you do wish to get authority from your clients, up to you what you do. And maybe some of the guidance is some clients may be of a higher risk than others. You may want to get some of those to actually authorize that quarterly update. It's up to you, but at least you can download the reports, issue them to the clients as well as you want to. Now, I think one of the key things from the Safer Accountant platform is because it's got taskers available, which provide practice management free of charge, is the fact that you'll be able to actually send that document to the client for approval if you want to do so. So the whole point is choice. And I think the whole point with MTD is some people think you're being forced to do certain activities. You're not. MTD provides an awful lot of choice and scope in terms of how you want to maintain digital records and how you want to wish to, let's say, obtain approval and confirmation if you choose to do so. So if you imagine we've done the quarterly updates, well, what's the next stages? Well, once you've done the quarterly updates, you can actually start doing the tax return. So if you imagine with what's happening with MTD is you think about year one. So year one is from April 2026. So the quarter four will be due by the 7th of May 2027. So just think about that timescale. May 2027, you've practically got 80–90% of the work, haven't you? You've done the quarterly update, but actually the summer passes. The client's going to give you more information. Actually, you may make some judgments in terms of maybe the stock provision or how a fixed asset may be dealt with, or maybe they have a bad debt, which you didn't know about until August or September. So this, again, provides choice in terms of how to do the tax return. So the really slick way of doing a tax return is within the ledger. So you should be able to, and we will provide the tax return software complimentary within the ledger if you want to do so, is you've done quarter four by the 7th of May 2027. And then let's just say in August, September, you're going to finalize the accounts. So you can then go back into the ledger, you make all the adjustments and you press quarter four again. Because again, you can press a quarterly submission anytime you like, which then means quarter four has gone up to HMRC, which then means if you choose not to use the Sage tax return software and you're using Digita, CCH, Iris, whatever tax return software, and I'll just tell you, they're all having to build brand new MTD tax return software. So if you're using self-assessment software today, you will need to use completely different MTD tax return software because there aren't box values, there are different submission requirements. For example, the CIS deduction at source is no longer a single box, it's a long list of everything. So you will have to review what tax return solutions you're using. But just in that case, I've submitted quarter four again in August or September 2027. So in your tax return software, you can pull down quarter four from HMRC and use that as part of the tax return process. Alternatively, you could take your quarter four submission, which would have been done in May 2027. You take that trial balance, you put it into your SEP accounts or your accounting or financial account software. You'll then do your accruals, prepayments, your fixed asset adjustments like you do anyhow, and then you'll take that SEP account and you'll pass it through to your new MTD tax return software. And this is called the BSAS. So therefore you make all those adjustments and then you'll file the tax return. So that's two options for doing tax return now, all within ledger, or take it out the ledger and do it as you do at the end of the year. Option number three, which no one talks about, is some clients, they'll see an advert on TV, all right? They'll see an advert on TV telling them that they can do all the accounts and bookkeeping because it's so easy, isn't it? They'll do their quarterly updates and they'll come to you in the summer of 2027, handing over their homework, basically saying, oh, can I have some help with the tax return, please? So I used to do the tax return on the HMRC portal, but I'm not quite confident in terms of how to do it in software. And you'll say, no problem. I've done my ICB greater qualification in terms of doing self-assessment. which then means you're in a position, two choices. You either look at the software they've used, and if the software looks good, it's all reconciled, you can use that if you want to. But let's be honest, how many times have you inherited a client who've been quite happily doing their bookkeeping and hasn't not been great? So you've got two choices. You go into that data and fix it, and sometimes it could take longer than actually starting from scratch. And therefore, you have the option to start from scratch. So if, for example, the clients have done their quarterly updates and it's just rubbish, you can start again. You can take, let's say, the bank statement, you scan it through Accounts Prep if you want to get the job done quickly, or put it into your favorite bookkeeping ledger, and you can file again through another quarterly update or another piece of software if you want to. And this is the whole point. Yes, the client has been maintaining digital records. It may not be as accurate as you want to, but the whole point is they've been maintaining digital records to capture as much information as possible. And this is the whole point. MTD gives you options in terms of how you can support it. I hope that makes it clear. No one else is talking about those processes, but I just want to sort of explain that to you. So here's something in chat. So once again, if PAYE income is £49,000 and self-employed in turnover is £10,000, would this client be required to start MTD from 2026? The answer is no. The only numbers you need to consider for that £50,000 threshold is self-employed income and rental income. You ignore PAYE, you ignore pension income, you ignore dividends received. It is purely self-employed and rental income. So you've done your quarterly updates and you're ready to do the tax return. So this is where you'll still be gathering the additional information, let's say dividends, interest received, etc., and now we want to do a tax return. So I'm going to show you how the Sage tax return is potentially going to be looking like going forward. Here's a question. So are self-employed and rental income added together? Yes. So for example, I've got Jenny who's got a flower shop. She's turning over £39,000 from doing flower arrangements. Jenny also has rental income. She's earning £1,000 a month from her buy-to-let. So 39 plus 12 is £51,000. So she'll be coming into MTD because her total gross income from self-employment as well as rental is more than £50,000, even though the self-employment is 39 and the rental income is 12. Does that make sense? So I'm now going to showcase what the tax return is going to look like in Sage. So we will provide this completely free of charge, and it doesn't matter if you're using Xero, QuickBooks, Excel spreadsheets, Free Agent for doing the quarterly updates. You can still do the tax return through Sage. So within Sage for Accountants, you'll be able to look at your client list. You'll go into, let's say, Sophie, and you'll be able to, let's say, drill into and do a tax return. I think this is the key point, is when you're doing an MTD tax return, it is different to self-assessment. But just imagine, you still need to do self-assessment. In the summer of 26, you will be doing quarterly updates, but you wouldn't have done the 25-26 tax return. So you need that experience being able to flip from making taxes to self-assessment. But also, when you're doing your MTD tax returns, you may have to go back in time and do a repair on a self-assessment tax return. That's the reality. So you'll be able to sort of create the new tax return going forward. You'll then choose which year you're going to be doing the tax return for it. And because it's done that digital handshake to HMRC, we'll know how many self-employment businesses and how many property businesses will need to be reported upon. So we'll give the option in terms of, let's say, whether you're going to be, let's say, a tiled status or maybe a list status. But already we have an estimated tax liability. And this is the key thing, is that tax liability is live. Every time more information is provided to HMRC, that tax number will change or be amended. So as you add more interest received or dividends received or put a capital gain in, that tax estimate will change live. So today, you're used to the idea is you're doing all the number crunching, you prepare a set of accounts, you draft a tax schedule calculation, you present that to the client looks at it and says, oh, that's a bit of a surprise. Oh, by the way, bookkeeper, I want to put through a stock provision. I want to reduce my stock value by £500 because some of the stock's gone bad. So you then make an amendment. The tax bill reduces by a couple £100, okay? That's what happens. The tax return is then signed off by the client, and you then submit that to HMRC. So you imagine HMRC does not have sight of any of the numbers until the client has given authorization. Now, that tax liability is live because every time you make an amendment to the accounts or the quarterly updates or apply different information, that tax liability is changing. However, that tax liability does not crystallize until the client has signed off that set of accounts. Does the tax estimate take into payments on account? No, the tax estimate is the total liability. Payments on account will be something in addition in terms of, let's say, what has been paid already. But the thing is, that can be broken down in terms of the drill down in terms of what's been paid to date. So you then go into, let's say, split out the situation. So Sophie's got bakery business, as also she's got sweet treats. So you've got 2 trading businesses. So you can go into each quarterly update and each submission online. And this is the key thing. If you imagine the quarterly 4 has been pumped up to HMRC, which means you can actually make amendments to it still, because of whether it's allowable or disallowable items, you can pick that item, you can amend it, you can tweak it. And as you can see, you've got pure visibility of the amendments which you're making into that income stream. And this is the whole point, is you can make amendments because that's reality. Life changes, new information comes into play. And this is really the first point when the client's going to say, yeah, this is the tax return I want to submit, and that is when it's crystallized. And this is where you'll be able to send the submission off to the client for authorization, that you've confirmed on the client's behalf the tax return can be sent, and the tax return is gone. Okay, so as we've discussed, MTD is creating change, but also it's creating new conversations. So one of the key things I want you to take back out today is not just thinking about the various digital solutions you can use, but also think about how to price for it. Now, that's a separate webinar in its own right, okay? But the key things are, there are 7 steps to MTD. Set up and training, agent service account, bring on software, create awareness, bring in opening balance if you want to do so. Quarterly updates, pressing update on the quarterly update is an activity. So you should charge for it, whether it's £20, £30, £50, that's an event. Clearly, there's data processing behind it. Data processing is taking some information and categorizing it. If your clients have banks to reconcile, the more banks which need to be reconciled, the more your clients should be charged. There's also the volume of transactions. The more transactions, they should be charged for it, which goes to the point. If your client's got a business bank account, that's hopefully reducing the number of personal items which need to be coded up. Then it comes down to the bookkeeping. This is where the value comes into play, but just don't give it away. If the clients want accruals, prepayments, sales ledger, reconciled, purchase ledger, get perfect on a quarterly basis, they should pay for that perfection. But bookkeeping, all that magic does not need to be delivered until the end of the year. Then we've got the tax return itself. Some tax returns are more complex than others. They may have more additional income sources to recognize or compute upon, and therefore the more complex that should be charged as well. And therefore, when it comes to advice or tax planning, whether that's pre-year-end planning, IHT, whatever it comes into play, that's again a separate theme, and that should have that clarity in terms of what clients should be doing. So as I wrap up, the key things you should be taking away today is education, education, education. MTD is changing. Your understanding hopefully has been increased in the last 59 minutes. But this is the whole point, is MTD is something which you need to be really on top of in terms of the detail, the legislation, what's a quarterly update, penalty point reform. All of this is changing, but the key thing is get the guidance which you seek. Then client segmentation. Client segmentation is a really important exercise. Not only does it validate which clients come into play, it also identifies which clients which you can be made more efficient. Are they using receipt capture tools? Are they using bank feeds? What are their approaches to life? Client segmentation identifies the problem, but also identifies the opportunities to work with certain clients better. Whether you've got 1 client or 10 clients affected by MTD, have a plan. Maybe your mind is buzzing right now in terms of what to do next, but the key thing is to write that plan down. Write it on a piece of paper, put it on the whiteboard. That plan is going to change and evolve. Think about the milestones you need to perform, but the key thing is to write it down and really think about what you're doing and why. But then also thinking about that communication. HMRC have done their first step. You'll need to actually do that client engagement. So whether it's a good old-fashioned face-to-face meeting, whether you're going to do events or webinars. I did an event a couple of weeks ago for an accountancy firm on a Friday. We did it in the village hall, dragged all their clients into the village hall, and we talked about MTD, and all their clients recognized the value of it. The key thing is engagement. Then it's considering the technology solutions available. The key thing of MTD is to be inquisitive. Speak to the software providers, understand what solutions are available, but also think about the solutions you need to use for your clients based upon their needs. The complexity, their growth, their retirement, or actually, will your clients be bothered to actually do anything? And therefore, if they're not, then you're using tools like auto entry accounts prep, get the job done as quickly as possible. Then you need to think about review, reprice, and re-engage your clients. The pricing needs to changing. You need to reissue letters of engagement for each one of your clients for MTD. Think about how you can do that effectively. We're just about to update the Go Proposal Oversuite letter of engagement based upon the latest guidance. But the key thing is to actually make sure you're covered in terms of risk. But also think about joining the beta. I think it's really important because when you speak to your clients about what MTD is all about, the fact you've actually done it for one client means you understand what's involved, what's the process, what's the sign-off. Again, if you want to join the beta, more than happy to hold your hand in terms of that process. But also MTD is that opportunity to, let's say, systemize everything, whether it's onboarding, KYC, AML, bookkeeping, data capture, bookkeeping, year-end accounts prep. It's all about how you do that effectively. And I think this is the magic of cloud. Cloud enables you to change your processes one by one if you choose to do so. And from Sage's point of view, we provide an awful lot from client management, free of charge, complimentary, as well as year-end accounts preparation. But also do not miss the opportunity which AI brings to your practice. Generative AI is the key thing. It is the key tool which will create capacity and save time. We're really excited about what Sage is doing with Sage Copilot. It's all about making smarter decisions, getting rid of those mundane tasks we all hate. If you've not looked at it, I would be inquisitive and have a take a look. But also think about the support. We have a great MTD hub. So we've got email templates, further guidance and webinars. You could watch me all day long if you wish. But the whole point is all that help and support and guidance and templates, as well as an Excel spreadsheet for client segmentation, all at sage.com/UK MTD hub. But the key thing with MTD is how do you simplify it? Quite simple, straightforward. Client segmentation, understand who's in, who's not. Think about engagement. Think engagement with your clients, software providers, get your plan in place and get one client onto the beta. As simple as that. And if you need any more help or support, it's all there. The hyperlinks are available. Or you can just contact me on LinkedIn. You know I'm always available there. But hopefully, I'm just going to put the Q&A. Done that, Emma. It's saying software. So e-signature is coming through very, very soon. So we'll have that authorization. That's not a problem. Will HMRC portal still be available? Those who aren't in MTD, it will still be available. So the portal is open, will be open for non-MTD clients. The portal will be open for MTD clients to see historical tax returns, but they will not be able to file tax returns going forward. If my client with property income subscribes, can I be invited as a bookkeeper? Yes. One of the key things which has happened with MTD is multiple agents. So as a bookkeeper, so you're having the accountant, the person responsible for the self-assessment tax return will be the primary agent, but there are secondary agents available. So therefore, if you're preparing VAT returns and the accountant then does the year-end accounts, you can then actually be the secondary agent where you'll have the capability to file a quarterly update, but the accountant who has the engagement will then do the tax return. And I think that's it. Is anyone from ICB to hand over and finish off? Hello?
I was listening to you. I didn't know we were going to finish. Thank you, Chris. That was really good. I can't believe how much you managed to pack into an hour. That was really helpful. Am I right in thinking that we can have the slides, Chris?
Yeah, I'll send a PDF afterwards, right?
Brilliant. Okay, so we'll send out this and the recording, and watch out for more content coming out around MTD and specifically from Sage as well. Thank you everybody for taking the time to spend with us today, and thank you very much to Chris Downing.
Anytime.
Have a good day all. Bye bye.
Bye-bye.